Hi, welcome to the webinar today. We're going to start right at the top of the hour in a minute or so, but thank you for joining us. All right, so it's 1 o'clock. We're going to start. Thank you again for joining us today. On behalf of the Environmental Finance Center Network, welcome to our webinar on the Water Infrastructure Finance and Innovation Act program. My name is Jessica Eckerlin from the Syracuse University Environmental Finance Center. Before we begin, we're going to go over a few logistics and then we can get started. During the webinar today, everyone will be kept on mute to ensure audio quality. If you have a question, please type it in the GoToWebinar question dialog box anytime throughout the session. We will be saving your questions for a facilitated Q&A session at the end of the presentation. After the webinar, you will receive a follow-up email that includes a link to the recording and other information you may need. You can also download the slides from today in the Handouts tab in your GoToWebinar control panel. This webinar has not been submitted for pre-approval of continuing education credits, but eligible attendees will receive a certificate of attendance for their personal record. To receive a certificate for this session, you must attend for the entire session and register and attend individually using your real name and unique email address. Certificates will be sent via email within 30 days of the webinar date. If you have questions or need assistance, please contact smallsystems@syr.edu. And now for a little bit about us. The Environmental Finance Center Network provides training and technical assistance to small water and wastewater systems in all U.S. states and territories through our building technical, managerial, and finance capacity programs. If your community or utility needs assistance with drinking water or wastewater system management, please feel free to contact us through our request form, which I will be sharing shortly in the chat. And here's a little bit more about technical assistance. As you can see, we provide a variety of services, including strategy support, planning, and facilitation of training opportunities like this webinar today to a wide range of audiences, including local governments and community organizations. So we've covered what technical assistance might look like, but we want to take a minute to discuss the expanded opportunities for EFC water technical assistance that exists because of the bipartisan infrastructure law. EFCs have been doing this work for decades, but in the wake of the bipartisan infrastructure law, EPA and EFC have an evolving mission to expand access to the state revolving fund. The result of EPA expanding the EFC grant program with the specific aim of bridging the gap between community infrastructure needs and increased funding through the bill. Much of that money in the water space is coming in through the state revolving fund. And for the next 5 years, the Environmental Finance Network and others around the country will be a source of additional free financial, managerial, and technical support for the region's municipalities, utilities, and tribes. The goal is to help communities access SRF funding for drinking water, wastewater, stormwater, and all the things that can be funded under the SRF. And this slide illustrates a continuum of services offered by the Environmental Finance Centers. We can assist with one specific need, helping others get to the starting line of funding, and multi-year projects as well. We aim to ultimately bring motivated communities to the point of applying and securing funding for project implementation. So I have been primarily talking about the SRF. However, the state revolving fund may not fit your needs, and that's why we're here today, and we feel it's important to spread the word about the Water Infrastructure Finance Innovation Act program as well. We have two fantastic speakers lined up for you today. Dallas Shattuck is a senior program manager for the US Environmental Protection Agency's WIFIA program, where she focuses on program processes, policy, and stakeholder engagement. Previously, Dallas spent over 4 years working on the Drinking Water State Revolving Fund team at US EPA. Also with us is Leslie Temple. Leslie is a loan manager in EPA's WIFIA program, supporting borrowers throughout the life of their loan. She assists borrowers in meeting ongoing legal and financial requirements, as well as addressing unforeseen challenges experienced in a dynamic project environment. As a member of the credit analysis branch, she also reviews new funding requests and informs project selection decisions. And on that note, we can get started. I'll go ahead and hand it over to you both. Okay, Dallas, whenever you're ready.
Okay, can you see my screen?
Yes.
There we go. Okay. Hi everyone. Again, my name is Dallas Shattuck with the WIFIA program. I'm going to kick things off, do the first few slides, and then Leslie will finish us off with the second set of slides. So what is the WIFIA program? The WIFIA program is essentially a government bank at the US EPA. US EPA headquarters, and our goal is really to provide low-cost supplemental financing to a variety of borrowers for their drinking water, wastewater, and stormwater projects. Our mission is to provide this low-cost, long-term financing to borrowers for projects that are important to them, that are going to benefit the environment, and that are going to save money to ratepayers. So I'm going to get things started with some of our high-level program features. So for the WIFIA program, we have a minimum project size for what we call large communities, and that's communities over 25,000 in population. And so for that $20 million minimum project size, there's also, you can see 2 dots down, a maximum portion of project costs that we can fund. So for borrowers that are over that 25,000 in population, we can fund up to 49% of the eligible project costs. So for example, if you come in and you have a $20 million project, you're over 25,000 in population, we could fund up to just under $10 million of your project. Now that changes if you are what we call a small community, which you can see on the slide, that's populations of 25,000 or less. And so for communities that are small communities, that minimum project size drops down from $20 million to $5 million. And in addition to that, I think this is also going to be covered on a future slide, but we can cover an increased portion of your project. So instead of just the 49% of eligible project costs, we can fund up to 80% of your eligible project costs. So if you come in and you have a $5 million project that you're looking for funding, we could provide up to $4 million in funding for that project. In terms of loan repayment, our loan terms are 35 years from substantial completion of the project. So that's not loan signing, it's not during construction, it's substantial completion of the project. And for some of our projects that are very large, construction can be like three to 5 years. And so some of those projects are actually looking at something that's kind of closer to 40, but from the time they sign the loan until the time that all of their repayments are due. We also have the option to defer repayments. Borrowers can defer repayments up to 5 years after substantial completion of the project. And that gives them time to raise water rates or get whatever their repayment source is. up and running, gives them time to start paying off some of their outstanding debt, like the SRF or bonds. And once that 5-year mark hits, the borrowers do need to start at least making interest payments. So we do have some borrowers who will do the 5-year deferred period. Then they will start making interest-only payments for X number of years after that. And you'll see an example of that in a few slides. The interest rate will be equal to the Treasury rate. When I gave this presentation a few weeks ago, that was like 4.25%. I'll talk more about eligibilities on the next slide in detail, but just now, broad water infrastructure eligibilities and borrower types. And because we are a federal source of funding, a lot of the federal requirements that you probably all have heard of are going to apply. NEPA, Davis-Bacon wage requirements, some of the domestic preference requirements, the AIS, BABA, things. If you've ever worked on an SRF project, you've heard of these before. So in terms of eligibility, I'll start with who is eligible. It's really a broad range of entities. We can fund public, private, public-private partnerships, so local governments, tribal governments, trusts, corporations. We, like I said, P3s. We can even also provide funding directly to state revolving fund programs to kind of supplement their loan funds. So as an alternative to them going to the bond market, so then they have more money to loan out to more projects. In terms of what we can fund, it's, again, really anything you can think of, like drinking water, wastewater, stormwater, infrastructure related, source, storage, treatment, distribution. A lot of our projects are addressing regulatory compliance, water quality issues. We have a lot of projects related to climate resilience, specifically drought and stormwater management. And then we also have a lot of projects that are also just really needed modernization of aging water infrastructure. And then in terms of the activities in the projects, it's anything from like planning and design through the construction phase. Land or equipment acquisition is eligible. Some of the carrying costs or overhead of construction and some of those related financing costs are also eligible for funding. So loan features and benefits, I'm not going to go over all of these right now. I wanted to include this slide so you have this to refer back to. In terms of favorable rates, the WIFIA program provides a fixed interest rate. It's locked in at time of loan closing. You do not accrue any interest until you draw down on the loan. And then once you draw down on that loan, you start accruing interest just on the portion that you've drawn down. And one thing that has been really great for some of our borrowers is that borrower credit does not impact the interest rate. The interest rate is solely based on what the Treasury rate is on the day of closing. So some of our borrowers have seen like significant savings compared to what they would get on the bond market by utilizing a WIFIA loan. Excuse me. There's no penalty for prepayment. You'll see some project examples here in a second, but we have a lot of projects that take advantage of like sculpted, flexible repayment schedules. Some borrowers like to do the traditional mortgage style payment, but there are a lot of borrowers who like to have flexibility to customize that repayment schedule, and that's one of the great benefits of WIFIA financing. We pair well with other forms of funding and financing. I mean, as you could see on the previous slides, we're a supplemental funding program. We rely on co-funding entities to fund like an entire project. I think our most common co-funder is the SRF program. We work very well with them. We fund a lot of projects with the Bureau of Reclamation, the Army Corps. I think we've done some with FEMA and then other like state and local grant programs. In terms of bundling features, we have the option to combine several projects under one loan, which is something a lot of our borrowers take advantage of. You'll see examples of that. We also have something specific that we call a master agreement. And so that's where we can provide an upfront commitment for a certain dollar amount for a community. If they have multiple projects that they want to fund, maybe those projects are all in like different phases. Some haven't been designed yet. Some are ready for construction. Some are in the planning design phase. They're in different stages of environmental review that's going to take different amounts of time. So we can provide like an upfront commitment. Like we will give you $500 million for these projects, and then you would come in as you're ready and draw down like smaller loans to get up to that 500 million. But it's helpful for a lot of our borrowers knowing that they have money committed to them for these projects as those projects are ready to go to construction. Leslie's going to talk more about loan management, but just to give you, I guess, kind of a teaser of what she's going to talk about, borrowers can request disbursements as often as once a month. Disbursements are processed within 15 days of request. And I guess I should provide context in that WIFIA is a reimbursement program. So you will incur costs and then submit the invoices to the WIFIA program and then get your disbursements within 15 days of request. And then you'll have like a dedicated loan management team to answer questions for you, walk you through paperwork and processes, and kind of help you figure out whatever questions you have and whatever you need help with. And so if you've ever heard of the WIFIA program or looked at our website, a lot of people get the impression that we only fund very, very large projects. And you know, if you look at our website, a lot of our projects are very large. That's one of the benefits of the WIFIA program, is that we can provide a lot of financing at once for communities who have a lot of projects going on at once. But we also can provide funding to small borrowers. And that's something that we always want to emphasize because we think that it's not very well known. So we can provide funding to small borrowers. I think the next slide is an example of a project for a small borrower, and this picture is actually from that community, Cortland, New York. And there are actually some, many benefits of using WIFIA financing for small borrowers. So like I mentioned before, if you're 25,000 or less in population, we can cover more of the cost of your project, up to 80%, as opposed to 49% for our larger borrowers. And you also have that smaller minimum project size, again, only 5 million compared to 20 million. Lower application fees, 25 versus 100,000. And also, we try to do as much of the loan processing work in-house as compared to some of our larger, more complex transactions to reduce the loan closing fees at the end. There are also opportunities for technical assistance and collaboration and communication with the WIFIA program to kind of talk about the project, go through documentation, review documentation, answer questions that you might have. So the next couple of slides, again, just some project examples so you kind of get a sense of what we can fund and where we funded things. So like I mentioned, this first example is for what we would call one of our small borrowers, the city of Cortland, New York. So they received a $16 million loan to do rehabilitation and upgrades to their water and sewer infrastructure and increase their efficiency. They also, I think, implemented some green infrastructure components. And so utilizing WIFIA, we had estimated that they saved $3.5 million by financing with WIFIA compared to a bond. So this project is the Springfield, Massachusetts Water and Sewer Commission. This is a good example of how you can bundle multiple projects in one loan, kind of what I talked about earlier. So Springfield bundled several drinking water, wastewater, and energy efficiency projects into one loan for $250 million to kind of upgrade and modernize their infrastructure. They took advantage of a lot of the flexibilities of WIFIA. So they did the loan deferral period. They have a more flexible repayment schedule versus the traditional mortgage style repayment. And having that large $250 million loan from WIFIA and knowing that they have this money for certain kind of helps them accelerate their updates so they don't have to spend as much time looking for funding. And so they estimate it accelerates their updates by 15 years and saves them around $60 million over the life of the loan. And so this project is also an example of bundling projects, but this is specifically what I had mentioned earlier, one of the master agreements where you get an upfront commitment from the WIFIA program. So this is for the Hampton Road Sanitation District in Virginia. This is their SWIFT program. And so they had 20 projects, all in very different stages across their service area that they needed to fund. And so they worked with us. We awarded them $1 billion in WIFIA loans to complete those 20 different projects. And so they have come in since 2020 for a little over 700 million of those dollars. They've come in with 2 batches of projects. And so we expect by 2025, they'll come in for like the remaining 300 million of that $1 billion master agreement. And then New Orleans is a really good example of that customized repayment schedule. So they used a $275 million WIFIA loan to implement over 160 climate-related projects that will kind of upgrade their infrastructure and repair some of their sewer lines that were damaged by storms. And so they have a very customized repayment schedule. Like I mentioned, you can defer all payments up to 5 years. And then after 5 years, you have to start paying interest at least. And so they took advantage of that, and they are deferring their principal repayments for the first 10 years of their loan. So doing that customization to kind of help increase their water rates more gradually, save money, they think it's going to save around $100 million over the life of the loan. And with that, I will turn it over to Leslie.
Thanks, Dallas. So now you all have heard a lot of detail about the different features that WIFIA can offer, how you can customize our loans to meet your specific needs, and you've gotten some ideas of how some of our communities that have loans with WIFIA have used those features to customize for themselves. And now we want to tell you sort of what to expect throughout the process, what your WIFIA experience would look like. So on the next slide, you'll see that you're basically going to expect 3 different phases. Throughout each of these phases, two things that we really emphasize in all of the work that we do is being as streamlined and efficient as we can be, and being extremely responsive to you all as our borrowers. So we really do try to make sure that we are moving at the pace that works best for you all. So as I mentioned, you're going to kind of move through 3 different phases throughout your WIFIA journey. Phase 1 is going to be project selection. That's where we're looking at your letter of interest. It's kind of a high-level review, and it's sort of that first introduction to us where we can then make a selection decision. From there, you would move into the project approval phase. This is when we're really diving into the details of your project and the loan. We're kind of negotiating those terms. We're talking through all the customization you'd want to do. And then you move into the project monitoring after closing. And that's where the rubber meets the road. You are putting the project into practice. You are meeting the requirements of the loan agreement, and you are getting your cash. So I'm going to go into each of these in a little more detail. And on the next slide, we'll dive into the project selection phase. So I mentioned the letter of interest. For our application, there's really that two-step process. First, the letter of interest, and then second, the application itself. So at the project selection level, you will submit to us the letter of interest. This is your introduction to WIFIA. This helps us get to know who you are as a borrower, what project you're looking at, and a high-level look at kind of your credit profile. So this is a fillable PDF that's available on our website. In a later slide, you will see a link to our website, and you can find it there under application materials. It's meant to be very straightforward, and it's just a collection of questions where you will provide us information about the technical, financial, and organizational aspects of your project and you as an entity, and we'll also take a look at kind of the environmental impacts of the project on a very high level, really just to make sure that the project is going to be a benefit to the environment. One thing that I do want to highlight is that throughout the letter of interest stage, we are able to and more than happy to have open discussions with you and answer questions that come up along the way. This is not a competitive process. This is, we have kind of open enrollment, we call it. We have funding available all the time. I will talk more about that later. But because of that, we are more than happy to have as many meetings or discussions or email exchanges with you as needed to give you all the support that you need to get that letter of interest filled out on a level that you're comfortable. If you submit the letter of interest and we still have some outstanding questions, we can always come back to you and ask for more detail. So it's not kind of a, you only get one shot. We're able to kind of keep that conversation going even after you submit before we make our selection decision. From the time that you submit your letter of interest, we commit to an 8-week turnaround time to get you your selection decision that would then allow you to move to project approval. We are trying to move faster than that 8 weeks, but you are guaranteed to get a response from us within at least 8 weeks, or at most 8 weeks, I should say. Now, once you receive that selection decision, then you move into the project approval phase. This is when we're really digging into the details. So that is when you are going to fill in the application that is also available on our website, also a fillable PDF, though of course you're also going to have additional documentation that's going to be kind of supporting documentation attachments to the application. Now, with your application, you're going to give us a lot more information about your project. We are going to require financial projections throughout the life of the loan. And you're going to kind of go through all of those negotiations. We're going to negotiate all the terms of the loan agreement, the repayment structure. We're doing a really deep dive technical review of the project, and we're working through those federal requirements like the environmental review and making that NEPA determination. One thing that I do want to highlight here is that with the NEPA review, for some borrowers that can be a little daunting, but we are here to guide you through that. We're here to guide you through all of what I just described. But so for the NEPA review, I know we do get a lot of questions about what to expect with that. We are going to ask you for supporting documentation like any surveys, studies, resource reports that you have had conducted in the field. You'll provide us with that documentation and we will take the process from there. We will engage in consultations as needed. We will review, make analyses based on available databases, and we will be the ones kind of running through that entire process and making that NEPA determination. If you are co-funding with the SRF, a federal grant, any other federal funding, we are more than happy to coordinate with that other entity. And if we are the lead agency, we are glad to share our environmental review documentation. Some entity, or, some other agencies are then more than happy to make their determination based on our review, and vice versa. If another agency is the lead, we are more than happy to adopt their materials. So the benefit to you is, again, we're streamlining the process and you are not having to do that federal review twice. You're just doing it once and we're sharing across agencies. So again, we're kind of going through that whole process, and along the way, we negotiate the final terms of the loan agreement. We all are comfortable with the expectations, and then we work together through the approval process. So we are going to move at your pace. We can close as quickly as 4 months on projects that have documentation in order and are ready to go with all of the NEPA documentation, with permits, etc. It can take as long as you need. If you want to secure the financing early, but you're not yet ready to kind of whiz through the application process and you need a little more time, we are happy to work at your pace. The average amount of time from the time that you submit your application to closing is around 6 or 7 months. The majority are between that 4 and 9 month window, but we do have some borrowers that take a bit longer, and we are more than happy to be patient with you and to work with you, sticking with you throughout the whole process. Then we have the exciting day of closing day, and then you move into the next phase, which is project monitoring or post-close. And that we'll dive into a little more on the next slide. Actually, before that, I'm going to talk a little more about getting to that closing timeline. Yes, thank you, Dallas. So we get a lot of questions about, when should I come in? Is there a minimum amount of design in order for me to apply? And the truth is, we are more than happy to work with you anywhere from 0% design to 100% design. Typically, we see projects coming in somewhere in the neighborhood of 30 to 90% design, and that tends to result in a faster closing because you just have more information. Things are a little more established, and we're able to make more concrete determinations. It's going to take a little longer if you have a lot of different options that you're considering and that your project isn't very well defined. But again, we are more than happy to work with you through that process. In terms of your credit profile, if you're highly rated, if you're issuing debt on a regular basis, then you probably already have systems in place. You have your internal processes, and it's probably going to go a bit quicker with WIFIA as well. But that's not to say that we're not willing to work with borrowers who maybe have a lower credit rating or aren't as familiar with issuing debt. That is not the case at all. We are more than happy to work with borrowers who have any credit rating above a triple B minus or above, I should say. And if you all do not issue debt on a regular basis, we are more than happy to kind of walk you through the process and work with you in tandem to make this a smooth process. As I mentioned earlier, if you have your environmental studies already in hand, that process is going to go smoother. There's just less waiting time. But if it's going to take longer, we'll be honest with you about sort of, once we receive this report from you that we need, it's going to take us X amount of time to be able to work through the process. So we'll help you kind of manage those expectations depending on where you are in the process. We also know that borrowers have different levels of kind of capacity. Some borrowers are spread thin, and it's maybe a one-person show. and other borrowers have a whole team and can be very responsive very quickly. That does, as I mentioned, we really strive to be responsive. And so we do not want to be the holdup, but we understand that if you do not have as much bandwidth, or if you're working through a lot of other things, we might not be moving. We're going to move at your pace, and it might go faster if you have that kind of full team ready to hit the ground. And we also do find that it does work exceptionally well if WIFIA has a specific point person on the borrower's side who can kind of coordinate among the different teams, the technical, the financial, the legal teams, to kind of keep everybody on track. If you don't have that, that's okay too. We can work with you in whatever setup your team looks like, but just know that it might take a little more time. So now that we've talked about kind of what would affect getting you to closing, let's talk about after closing. So once you close the loan, you then transition to my team, which is the portfolio management team, and we are your primary point of contact. You have a single person that you are working with throughout the life of your project, throughout the life of your loan, to answer any and all questions that come up. For some borrowers, they're not familiar with the federal requirements. This is their first federal loan. We have trainings available for you. We can really help guide you through that and make sure that you're successful. Since you're working one-on-one with your team working with one WIFIA team member, when you are ready to submit your invoices and make that request for your financing, for your funds to be dispersed, we can be very responsive to you, and we can help coach you through every single thing that we would need to make that process quick and easy, and we will get you your money within 2 weeks. And then, of course, things change. We know that projects are very dynamic. You are having to deal with the realities on the ground that are not always playing out exactly as planned. And so if there need to be some changes to the loan agreement, if you need to kind of make some exceptions here and there for ad hoc occurrences, we're going to help you with that too. And we're going to talk through all of your options to make sure that you are set up for success as much as possible. So that is sort of the phase of the the process of the 3 different phases that you'll move throughout the life of your WIFIA experience. And now, when can you come in, right? We are very excited that we have financing available all year round. We are more than happy to start that process with you whenever it makes the most sense for you and your team. So there is no application deadline. We have financing available all year. And as we mentioned, we can fund up to 49% of the project costs for larger communities, and for communities of 25,000 people or fewer, that's up to 80% of your project costs. So with the selection on the next slide, you'll see that you can submit that letter of interest whenever you are ready. You can start the letter of interest, ask us a whole slew of questions, and submit several months later, whatever makes the most sense for you. And we expect to have money all year long, so there's no rush. You do not have to kind of come in on a first come, first serve basis. We're happy to work with you when you're ready. And so with that, we have on the next slide, we have some opportunities for you to learn more. We know that maybe your whole team wasn't able to attend this, but you heard something you like, you want to share it with the rest of your team. You can either set up a one-on-one office hours or a one-on-one meeting with us, and we are more than happy to talk through your specific situation, answer your nitty-gritty detail questions that you might have, and kind of help you narrow your focus of how you might want to use WIFIA. We also welcome you to join us for our monthly office hours, where we're going to be kind of sharing the same information we went through today and having a Q&A. I know some people find this very helpful just hearing the questions that other people ask and hearing how other people are thinking about it, it kind of spurs a new light bulb in your own head. So please do feel free to join us. If you would like to learn more about the office hours, you can sign up at the link on this slide here. And if you would like to set up a time to meet with us, you can email us at wifia@epa.gov, or on the last slide, Dallas and I have our email addresses, and you can always feel free to reach out to us directly. So with that, we would love to, I believe we're moving into the Q&A session.
Yes, thank you, Leslie. We have some great questions that have been posed here. First one is, can this funding be used for infrastructure location, condition assessment, asset management, and critical infrastructure resiliency planning?
Okay, so there were 3 different components there. Dallas, I may ask you to weigh in on the asset management, but for the planning, we can fund planning and design loans. We can also pair those loans under a master agreement so that, like, say loan 1 is for planning and design, and loan 2 is 2 or 3 or up to however many you need are for the different phases of construction of that project. And can you repeat the third? The third
part of the question was critical infrastructure resiliency planning.
Yeah, and the other was asset management.
Oh, infrastructure location, condition assessment, asset management, and critical infrastructure resiliency planning.
Thank you. So for the site location question, we do have some borrowers that include sort of site characterization costs in their loan. One thing to keep in mind is that for that loan, it would also have to meet the project minimum of $5 million for small borrowers, $20 million for larger borrowers. So it may be that you would need to include those costs in a loan bundled with other projects. But that is something that we do have borrowers take out loans for. And Dallas, can you speak to the asset management question?
Yeah, good question. I think in general, something like asset management could be, lumped into like planning activities, but again, it kind of goes to what Leslie said, we do have that project minimum. So, I think for WIFIA, it would be different where with the SRFs, for example, they sometimes give technical assistance or small grants or loans for communities to do just an asset management plan or to work with a third party to do some sort of asset management activity. Whereas again, for WIFIA, we have that $5 million, $20 million minimum for a project. So logistically, realistically, on doing asset management on its own, I don't see it meeting that minimum cost criteria, if that makes sense.
Great, thank you. I have another one here from Edward Kaufman. Is this program open to investor-owned water utilities?
So I believe that would be like a private, like a corporation-run water utility. And yes, we are able to lend to corporate entities as well.
Great. Another one here. Can you briefly cover why your loans are perhaps a better solution for funding projects rather than other means, bonds, etc.?
That is a great question. So Leslie, can I start this one and then you jump in if I miss anything?
Absolutely.
Okay, yeah, I love this question. If you heard my bio at the beginning, it was actually over 6 years on the drinking water SRF program. And so I always love getting this question. So I guess I will start from like the SRF WIFIA perspective, because that's the question I think we get asked a lot. And then if there's anything I'm missing specific to bonds, maybe Leslie can fill that in. So for WIFIA and SRF, both are very great water infrastructure funding programs. A lot of overlap, but there are instances where they have different benefits or maybe focuses. So for the WIFIA program, it's a lot more about customized loans, more responsiveness, and like catering to like very complex, complicated negotiations, loan agreements, things like that. Whereas my experience with the SRFs is it's a lot more about doing a lot of loans that are maybe for smaller amounts and trying to get the money out the door as quickly as possible and being able to help as many communities as possible. And so not always being able to do the amount of like loan negotiation and customization, both in terms of like the loan agreement and the repayment structure as the WIFIA program might. Again, there are over 100 SRF programs around the country. So that is a general statement and might not apply to all 102 of them. In terms of like the loan terms, typically what you will see for the SRFs is 20 to 30 years. On the drinking water side, they can go up to 40 years for what they call disadvantaged communities, but that 40-year loan term is rare that it is offered. Again, because the SRFs, the goal is to get the money out, put it into projects, get the money back, and then loan it out to another community, where that is not what's happening with WIFIA. The money just goes back to the Treasury. So we have more time to be able to do negotiation, be patient capital, like wait for these large projects to undergo construction and then pay us back over the next 35 years. Let's see, and the last thing I'll talk about for SRF, I think, is like the amount of funding that is available. So for WIFIA, our loans have ranged from $13 million to $762 million in like a single loan. We have master agreements, like I showed you before, that are like $1 billion plus dollars. The SRFs typically cannot provide loans of that size. One, because they don't have that amount of money all at one time to be able to give, or two, it's because if they give all of that money to one entity, then there are dozens, maybe hundreds of other entities that then don't get any money for the year. And the SRFs have a lot of like goals and requirements that they have to meet. They have to give out some of that money as grants to, again, disadvantaged communities is the term in the statute. And so they're trying to spread that money out amongst as many communities as they possibly can. And so I think WIFIA is really good about being able to provide much larger amounts of money at once and providing upfront commitments for much larger amounts of money. Leslie, I don't know if there's anything about the bond market that you want to add. I just want to end with, again, that both WIFIA and the SRFs are great programs. We co-fund a ton with the SRFs. I think half of our projects are co-funded with them. And so they're both really great sources of funding that just have some different nuances if you look at them closely.
I think the one thing that I'll say for, how WIFIA compares to other products on the capital market, I think the difference with WIFIA is that flexibility in the structure, the repayment of the loan. So we commonly see a lot of borrowers combine WIFIA with bond financing. And so we don't see bonds as kind of competition. We see ourselves as a complement to bonds. A lot of borrowers will end up using their bond financing first and structure their WIFIA debt around that more fixed debt structure of the bonds. And so they kind of use our longer terms to keep their rates smooth, retiring the shorter term debt first, and then kind of backloading our principal after that other debt has been retired. So that's sort of how we see a lot of people using it.
Okay, we only have about 10 more minutes, so we're move through a few more questions. Here's one. Can you get an environmental impact waiver?
So we do have to do a NEPA review. We will make a determination there. Sometimes we are able to make the determination of categorical exclusion, but it is really going to depend on your project. But every single one of the projects that receive a WIFIA loan will have to go through that environmental review process and get a NEPA determination.
Great. Is there a backlog of projects to be funded? Are there times during which WIFIA receives many applicants? And actually I have one to tag on to that is, I know you said it's variable and that you work with the applicant, but about how long is application process from start to finish?
I can take I'll take the first part of that. So we do not we don't have a backlog of projects. If you look on our website, we have like a section that we call pending loans. So those are projects that have been selected, and they're not backlogged. A lot of them are just, going through the application process, or they're working on submitting their application. So those are just ones that are like in process. We don't have a waiting list. Again, we have funding. We're always open. We have a lot of money available for communities. I would say, I think Leslie mentioned this, historically, it was a competitive process. We've switched to this like rolling process, so we're always open. And we're starting our second year of that. I think last year we still received a lot of applications, like when our notice of funding availability went out, just because everyone knew about it. We were doing webinars. People are used to just submitting their documentation when they see that notice of funding availability notification in the Federal Register. I don't have a good sense if that will be the same this year. If I had to guess, probably we'll see an uptick in letters of interest submitted over the next several months, since we did just announce our notice of funding availability last week. But again, you can submit them at any time, not a backlog. Did I miss anything, Leslie?
Yeah, so the second part of the question was asking about like the closing schedule, and the vast majority of our projects we see closing within roughly 6 to 9 months from the time they submit the application. You can reasonably expect that general time frame if you have a team that can be really responsive and address our feedback quickly. If you have wiggle room in negotiating sort of the legal terms of the loan agreement, and if you have your technical and environmental documentation ready to go, and if the project is not likely to have potential impacts to the environmental resources, or potential adverse impacts, I should say. So it's going to be kind of quicker if all of those things are pulled together.
All right, thank you. Here's another one. Can this funding be used for refinancing existing loans?
No.
All right, can this be used for lead service line replacement and or inventories?
Yes. I'm not trying to give one word answers, but yes, we can fund lead service line replacement and inventories. Again, I think that would go back to the question that you first asked about like more planning activities. We do have that minimum threshold, so it would have to be a very large inventorying effort to get over that $5 or $20 million threshold. But if that's lumped into like the actual lead service line replacement, then yes, that's definitely a possibility.
I think you just answered this, but how small of projects have you funded?
Good question. Yes, so the smallest loan, there's actually several, that are $13 million. So those are our smallest. Without giving any specific numbers, we do have some in the pipeline that are smaller than that.
And we
But they
don't
haven't-
have a minimum loan size. We just have that minimum project size, or project amount rather. So there's no floor on the minimum loan. Similarly, kind of in the opposite direction, there's no cap on how large the loan can be.
That's a great clarification. You talked earlier a little bit about co-funding. In the presentation, you said you can fund a WIFIA project through SRF process. Can you explain a bit more about how that process works? And so do you need to apply through SRF or through WIFIA? Like, where do you start?
Oh, so yeah, thank you. That's a good clarification. So we have the ability to provide funding directly to, it would be the state agency that implements the state revolving fund programs. So like they would come to the WIFIA program, we would negotiate a loan, and then they would use that funding to kind of supplement their revolving loan fund program, either like in excess or instead of going to the bond market. So it wouldn't be like on an individual community or project basis. It's the SRF themselves who would come to us for funding for their program.
But if the borrower wanted to co-finance, a reminder, WIFIA can fund up to 49% of project costs for large communities, up to 80% for small communities. So if you wanted to use SRF funding for the other portion of that, the other 51 or 20%, then you would need to apply to WIFIA for WIFIA funding and to the SRF for that SRF funding. I think that was maybe the question.
Oh, okay, thanks.
Yes, thank you. I have another one here. Are there any refinance options years down the road should the interest rates become lower? Or the interest variable? Or is the interest variable?
So the interest rate is not variable, and we do have, it's fixed, it is set on the day of closing. We do have a one-time option for an interest rate reset. Think of it like a refinancing. And that is available to any borrower who has not yet drawn on their loan and who has not passed the 50% of construction mark. So if you are planning to use other funding, let's say you have a grant and you're going to use that funding first, and then you'll use WIFIA later down the road, then you're still reserving that right to reset your interest rate. But if you're planning to use WIFIA funds right away, then practically there's really not that option to reset your interest rate because you'll be drawing quickly.
Great, thanks, Leslie. Quickly, can ARPA grant money be combined with WIFIA loan money?
Yes. Yeah, so ARPA funding could be a co-funding source for some of these projects, and that was an example. That's the one I was trying to think of when I was presenting. Some of our borrowers are also receiving ARPA funds. The one thing that I don't know if we mentioned, so by law, a WIFIA project can only have up to 80% federal funding. And so that's something to keep in mind. The WIFIA funding would be federal, ARPA would be federal, like Bureau of Reclamation would be federal. Some SRF is federal without getting into all of that. Some of their funding is federal. They have flexibility to kind of decide what those dollars are and what they use them for. So that's something to keep in mind.
Great, we have 2 more in the last 2 minutes. Possible to apply TARP funds as part of credit.
I'm not sure I understand the question.
Is it possible to apply TARP funds? I'm not familiar with what TARP funds are. Are you, Dallas?
I'm not. I'm Googling it right now. So I would say maybe whoever asked that question, if you could send Leslie and I an email, we can get you an answer to that. I'm sure our underwriters probably know what TARP is without having to Google it.
Sounds great. All right, this will be our last question. Theoretically, what would happen if an issue of non-compliance is found with a funded project, i.e. non-compliance with BABA or wage determinations? Does that change if you are co-financing with another funding source?
So I'm assuming another funding source, you mean like a federal funding source where the same requirements apply. We are going to enforce the federal requirements like BABA and Davis-Bacon and the rest. So if we do find non-compliance, we will assist you in correcting that and making that component compliant.
All right, great. Huge thank you to Dallas and Leslie today for sharing your expertise with us. Following this webinar, you will receive a follow-up email with the slides from today and a link to the recording. I know we got several questions where folks couldn't see the handouts, but you will receive those shortly. We also ask that you complete the webinar evaluation following this so you can let us know your thoughts on today's session, as this helps us plan future webinars on topics that are important to you. Thank you again, and we hope to see you at future EFCN events. Thank you both so much.
Thank you.
Thanks so much.